Good morning, trading family. Welcome to Bang Bang Trading. Today we are going to start to cover how to identify and how to trade a range. So let's jump right into how would you start a range. The way to start a trading range is you want to identify a high and a low. Easy enough? Good. Next, what you want to do is grab your tools. Okay, we have tools here on Tradovate right here under this little icon that says drawing tools. Choose your shapes and choose a rectangle. Now that we've identified a high and a low, here's what you want to do. You want to take this rectangle, go from the close of the candle Why is this not working? Go from the close of the candle to the close of the candles on the bottom. Okay? And drag it over to the right. Now, with your mouse, you'll have this little hand appear. Click on that hand. On the background color, okay, it's going to have to stay white. Bring your opacity down to 0. Change your border color to any color you'd like, okay? We'll just use purple for the purposes of this video. We're going to make the outline of it. Let's try that and see what it looks like. Then hit apply and save. And now you have a nice empty box. Okay? Now, is this going to be an actual range? We don't know yet. Okay? This is just where it was when we came in here and we started teaching live. Okay? Now, had we came in here and we had this high and this low, that's where we would have started a channel or drew our box for a range. If it broke that, this is where you would start your next range, and so on and so forth. Okay? You don't want to change your top because we never broke out of that area. Okay, this is identifying and setting up a new range area. Okay, now that we have what appears to be a sideways movement or a range, we want to go ahead and mark off a no trade zone. And what is a no trade zone? A no trade zone is exactly what it sounds like. It's an area in a range where we will not trade. Now, in the trading zone, that area, how to identify it, there's really no right and wrong way to make this no trade zone. Okay, what you're doing is you're looking for that middle area of the overall zone where you don't want to take any trades, okay? You'll get chopped up and chewed out when you trade in that no trade zone, okay? How you want to trade your zones you would want to trade to the upside from the bottom of that zone. Okay, right here it's forming. And to the downside if price action came up here. Okay, that's how you trade a zone, a range. Okay, so if you wanted to trade a range, you would be looking to go long at the bottom of the range, or you would be looking to go short at the top of the range. Now, is this going to be a range? Well, only time will tell, right? We're doing this as the market is unfolding. All right, this is how we're trying to set up and identify a range area. Okay, now if this bar breaks below it, then we really don't have a range, right? Because we haven't had price come back up to the top of that range yet. Okay, so this is just how you would identify a possible range in a live market. Okay, you would want price to come down and back up to test that range. Okay, now let's go look for ranges in past price action. I gave this for homework tonight for members of our group at the current time. We have a range. Let's go ahead and get our shape, the rectangle. We have a range that formed right here. I'm not gonna go, let me do it again. Let me go ahead and do that again. Let's change the background opacity to 0. Pick your border colors and make it the length you'd like. Hit apply and save. Now you have your range. Now let's go ahead and mark off our no trade zone. Okay, now we have that no trade zone marked off of that range. So now when we trade the range, we're only looking to short it at the top and buy it at the bottom. Okay? If you want to trade the range, you never want to trade in the no trade zone. This is where traders get chewed up, chopped up, and spit out. Never trade in the no trade zone. 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 Got it? Good. Next, what we're looking for is for price action to be up in the top 50% of the range. Let's go ahead and mark off our 50% mark. We're just going to eyeball it here. All right. Notice price action has stayed below this range the entire time. Right? We want price action to be in the top 50% if we're going to trade the breakout of it. All right? If we're going to trade the breakout of it. So again, we just identified one area. I'm not going to use this example as how to trade the range because of several reasons, and I'll discuss them real quick. One, We are at the opening bell. Okay? If you look at the timestamp on my cursor down here, this bar was the opening bell bar. We have a specific strategy that we trade the opening bell with, and it's not the range, okay? It's something different. I'm not going to add it in this video. Let's go ahead and identify another range. Here we have another range. Let's open it up. And let's mark it out. Grab our shapes, rectangle. Let's go from here right down to the candles, right where the candle closed. Now we have this range. Let's go ahead and hover our mouse, our hand, get our hand on that line. See the cursor? Now it's a hand, cursor, hand, cursor, hand. Double click, opacity to 0. Choose your color. Choose your width. Save. That's not the color I was going for. Okay, yeah. Choose the wrong one. Alright, now we have our range. Next, let's go ahead and mark off our no trade zone. Come to your drawing tools, go to your shapes, choose a rectangle, and you're looking to grab the meat and potatoes of the range. Okay, now we have our no trade zone. This is our no trade zone where we do not want to trade. What do we want to do in ranges? We want to sell the tops. We want to buy the bottoms. As long as we're outside of the no trade zone. Okay? Do not, I repeat, do not ever, 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 ever trade in the no trade zone. Trading is simple, guys, and trading is extremely mind-blowingly easy when you understand it. When you follow a strategy, when you set rules, and you stick to them. Trading is the most simplest job you'll ever have in the world. Okay, so learn this strategy. Watch this video every single day for a week before you even think about trading. Okay? Then I want you to start going into your charts, setting up this range, screenshotting it, and sending it to me here in Discord. Okay? I want you to be able to identify the range. I want you to be able to identify your no trade zone. Okay? Now, what we're going to do, now that we have our perimeters marked off, we have our no trade zone marked off, now let's go in and mark off a 50% mark, which you could do here with the tools. You could get a line. All right, we're just looking for that 50% mark. All right, now with that line, let's go ahead and make that line really big, and let's make it purple. Again, I'm going to make mine purple. All right, it's looking better now, isn't it, guys? So now we have this overall range with our no trade zone and our 50% line. Okay? Now, this range happened to form in a specific location. All right? We have yesterday's high up top where that range formed. All right? So now we have a range in a specific location where there is a lot of selling pressure above us. Okay? So trading ranges in these locations with a lot of pressure above us is considered a very high probability area to trade, especially trading the tops of those ranges. All right? You have lots of factors on your side trading a range in a specific area. Okay? Now that we have that all marked off, we are looking to trade the range breakout. All right? We want to trade the breakout of this range. Now, how do we do that? What you want to do, we're looking for specific criteria, okay? We want the price to be in the lower 50 percentile of the overall range, all right? Price has to be in the bottom 50% of the range to trade a breakout of a range. If price starts here and moves relatively quickly here, you are not touching a breakout. Okay? Price has to be trading in the bottom 50% of the range, in the bottom 50% of the range, in the bottom 50% of the range, in the bottom 50% of the range. Okay? Price has to be trading in the bottom 50% of the range for you to trade a break out of that range. Here, notice that price was trading in the bottom 75%, and now even better, it's trading in the top 25 or in the bottom 25% of that range. You could not ask for a better setup than that. You could not possibly ask for a better setup than that. Okay, this is where you're going to make your money. Okay? Patiently waiting to trade the right breakout. What is the criteria that's required to trade a breakout of a range? Okay, what we want is a candle must close solid in color outside of that range. Okay? It must close outside of the range solid. It can't be a wick, okay? If the candle came out like this, okay, if your candle came out but look how it closed. It came out, but it went right back in. Okay? No good. No. No good. You must, I repeat, you must wait for the candle to close. Very important. Very, very important. You must wait for the candle to close. Once that candle closes, you're looking to enter on the second candle and putting your stop loss above the close of that candle. Where are you looking to take profit? To take profit outside of a range, you want to look left. Okay? So look left and see where you identify an area where price struggled. Okay? We had some resistance here. We were met with resistance, and this is kind of like, think of it as a micro mini range before we finally broke through. Okay, so in this area, you have the potential to struggle. Okay? Now let's open up the screens. And now let's look at our potential profit target. Okay, this candle is the candle that broke the range. This candle would be your entry, with your stop placed above that candle. Now that's a pretty big candle. It's not too big. It looks bigger now that we have it open, but that's a good entry candle for your stop loss to be. Okay, so your entry on this let's open it up here. All right, all we're doing is zooming in, guys, so you could get a bird's eye view of how to trade this. This is your entry candle. This is your entry candle because it closed outside of the range. Forgive me, that's not your entry candle. That's the candle that closed outside of the range. Okay, that's your signal to enter, right? It closed. That's your confirmation candle. You are going to enter. You're going to place. That was weird. You are going to place your order at the close of that candle on the next candle. Okay, this candle opened, it pulled up to here, and then it made its move to the downside. Okay, so what you want to do, how you want to take that trade, there are a few ways to do it. One, on the close of that candle, sure, you could just hit sell market. Okay, you could hit join the ask, or you can left click on your mouse and put an order to sell right there. All right, or once you see this candle forming off screen here, not off screen, you can have your order waiting. Okay, you can have your order waiting with your parameters set, and then you could drag it and just drop it, right? And there it goes. Oh, that's not it. You can have your order ready. Let's get out of these. You could come up here, set your order, and drag it right down to here. So when that candle closes, you could just drop your order, right? And the second it goes, it's gonna, if it doesn't pull back, you might miss the move. All right, so these are the three ways that you could play it. Sell market, which is going to get you filled instantly. Join the ask, which means that it's going to put your order in, but if the price moves too quickly, it's not going to get filled. Okay, so you may want to use just instantly sell the market. But those are choices you're going to have to make as a trader, and you'll develop those skills as you grow. Okay, so this is how you take a breakout of a range. You wait for the bar to close. You want to buy the second bar at the close, and you want to put your stop loss above that bar. Now let's look left and see where we should put our take profit. We're looking left. and we're looking at this area right here. Okay? Because this is where sellers were trying to push the price down here. Okay? So there's probably, you're probably going to have this area right here, a reversal. Okay? Because a lot of traders are going to look left like this, see this area, and they're going to know that we could possibly get a bounce to retest this zone. And this is one of my favorite drawings that I like to draw, is you'll have the breakout, the retest, and then the continuation. The breakout, the retest, and then the continuation. So now, this is where you want to determine your profit, okay? You guys will develop your own trading style in the future. Right now, as a beginning trader, you're only going to be trading one contract at a time, nothing more. And if you do trade more than one contract, then you're already not following the rules that we have provided that are going to help you become a consistently profitable trader. So if you're not going to listen to what we're telling you, you're probably going to continue to be a losing trader for the rest of your life. Okay? So it's very important to rid yourself of yourself and be willing to listen to others and learn. Okay? A lot of trading has to do with denying yourself. Right? Denying your thoughts, getting rid of bad habits. Okay? You are not allowed to trade more than one contract in the first 60 days of trading with us as a new trader. If you're brand new to the market, you are only trading one contract, and that is after you've learned this strategy and you have it down. Okay? You want to give yourself time to have this strategy engraved in your brain. Okay? So now that we looked left, we have an area where we can take profit. Okay? The profit target on this trade, 11,300, is about $20, okay? The way that I want you guys to take your trade profit is you have a $20 potential move, okay? A $20 potential move. I want you looking to capture half of that, okay? A $10 move. So you want to put your take profit somewhere right about here. Okay, you already know where it's possibly going to retrace back to the upside. Okay? So I want you taking profit at about 10% of whatever the move could possibly be. Now, you should already have this information by the time you have, as soon as you have your range, whether you're just starting it like we learned in the beginning of the video, or whether you have it, you've come to the table and you saw a range, you've identified it, and you already marked it off. The next thing that you want to do is identify your areas to the left. So when you do get that break out of the range, right? When you do get this candle, you're ready to take the trade. You already know where you're looking to profit. Okay? If you wait to do that when you get in this trade, you're going to miss it. Right? You're going to be scrambling around. And again, That is not how profitable traders function. Okay? We prepare, right? We wait for the trades to come to us, right? We're already waiting. We already have everything ready to go. So how can you do that? All right? There are several ways to do that. One, you can come up here, okay? You can go to dollar value. Now that you already know your range is $20, this market pays you $2 per dollar move. So you come here, you get this set up for $10. Okay, you're not going to have it for your stop loss, so, put your stop loss, whatever you would feel comfortable losing, okay? But you don't know how big that bar is going to be, right? It could be a small breakout bar. It could be, it could be any size. That you don't have any control over, okay? But within this range, really weird today. Within this range, okay, you could still have the opportunity to be prepared with this range, okay? Just by doing that. Hit save. This way when you do that and you sell, all right, you already have your take profit ready to go. Now let's look and see how that would look. Let's sell 2. Let's drag it down to the close. All right. So $10, you could probably go a little more because that's not actually 50%. All right. So you could just drag it down once it's filled and on the table. All right. I'm really not sure what's going on here. Why this is glitching like this. But anyhow, so now you're ready to roll. Okay. You never want to be greedy, especially as a beginner trader, all right? Your trading style will develop over time, okay? I'm going to give you the beginning knowledge, but your trading journey over time will expand, okay? And you could start building on to the knowledge, the foundation that we're providing you, okay? You can trade however you want as long as you're able to identify areas and you know what you're looking for, right? You know what you're looking for. You know where you want to be a trader. You know where you don't want to be a trader. Okay, we're giving you the foundation to becoming a consistently profitable trader. It's up to you to build on that and develop your own trading style. All right, but if you're a brand new trader or you're a losing trader, you need to listen to what we're telling you. Okay, if you're a gambler and you're just somebody who can't control yourself, trading's not for you. Doesn't matter what we teach you here, you're still gonna gamble and you'll still lose big. So one contract is all you're trading. That's it. Okay. Now I don't want to cover anything else in this except the ranges. So that's how you build a range. Let's go back to the front and let's check on the range that we built. Okay, so this range actually worked, right? Now we can adjust this range, but let's just take a look at this. Okay, had we traded it like a range, okay? Had we traded this just like a range, would you have took this trade or not? Okay? Would you have took this trade or not? Would you have bought the close of this candle? This is great that this worked out this way, right? I would not take that trade. Why? Let's look left. Major area. And I don't mean major like major, but when you're trading this style and these ranges, right, we have we have way too much noise in this entire area to take this trade to the downside. That's reason number one. Okay? Reason number two, even if we did, right, your profit target here is it's going to be slim, all right? Because you have all of this area acting as stoppage from a continuation of a breakout of a range. All right, so this would be an area where you look left and there's just too much congestion. You don't have any space to really go. Okay? Like on these breakouts to the upside, you had lots of space to the left. Okay? You had lots of space to the left. Immediately to the left of this range, you have a lot of congestion. You don't have a definitive area. So this is a range trade that you would not take. Okay, you wouldn't be looking to take it. And there's more reasoning behind that. Let's zoom out. This is yesterday's high. This is yesterday's low. We have a major area of support right below us. Okay, so the odds are not in your favor to be trading to the short side so close to an area where a lot of buyers are waiting. Okay? Your better odds are to trade the breakout to the upside of this range. Why? Let's look left. We don't have anything here to the immediate left like we do right here. Okay? So several reasons not to trade this breakout. Alright? The biggest one, the main one, is all the congestion. We don't have a definitive where could we go other than right back down here. But the odds of that happening are not good. Okay, sure, you could say, we're making lower highs and lower lows, right? Sure, you could make that argument. But you could also make the argument that we just made a double bottom prior to that candle, right? You could also make that argument. But you don't want to start getting into arguments with yourself, right? Just use the information you have. There's way too much congestion in this area to trade this to the short side. Okay, use common sense. There's going to be a lot of buyers waiting to buy this up down here in this area. Okay, this is a support area right now. And look at this. All these trends are trends, or all these ranges, I'm sorry, I keep calling them trends, are ranges within a range. Okay? Yesterday we ranged. Today we're continuing that range. Think of this as one big range. Now, if we break below this range or above this range, that's where you're looking to enter. Okay, if we break this range, we're looking, the bears want to take it back down to this low. If we break yesterday's high, the bulls are going to want to take it back up into this major resistance area, right? Okay, so the bulls are going to want to take it up. The bears are going to want to take it down. All right? So pretty neat. There's ranges all over the places, guys, all right? Learn to identify them. This should have been your first range that you should have had marked off, right? We have it marked off here, not as a range, but as yesterday's high and yesterday's low. All right, so any breakout, you would be looking for a bar to close above the range or below the range. That's what you're looking for in ranges to trade them. All right, and then where, again, we're going to do it again. Where is your take profit? Look left. Look left. All right, here, if we break to the downside, we would look left and expect price to come down, come back up for a retest. Okay, but expect to have a pullback in that area. All right, so if we break that range, we're talking 20, about a $70 move. Okay, you want to take profit on half of that, so $35. So range within a range, right? Lots of ranges. Ranges are very, very common. They happen all the time, all day, right? The market likes to move, and then range, and then move, and then range. Just like a runner likes to run and then rest. Run and then rest. All right, so let's look for one more range here. And this one's actually another excellent example of why not to be greedy. All right, let's mark off our high. Let me open this up a little bit more. You know what? Well, it's already formed, so let's just do it. If it wasn't and you were here, okay? This is another good example. So if this was your range, this was your no trade zone, right? This was your first bar to break out. Would you take that? All right, would you take that? Nothing to the left of it, right? Nothing to the left of it. So that would be a good entry bar. But I'm not asking you would it be a good entry bar? I'm asking you, would you take that trade? Think about it for a minute. I would not take that trade. And here's why. What do we like to call the VWAP, guys? The VWAP is where money changes hands, right? The VWAP is where money changes hands. I would not take this trade, even though we have all this open space and we don't really have anything to the left of it, right? Or your profit target could potentially be huge, right? You got a huge profit target potential there. But the VWAP, right? You should always assume that you're going to see a reversal at the VWAP, okay? So this trade I would not have taken. What would I have done? I would have waited to see what price did in this area, okay? When a bar lands on that volume weighted average price, give it a minute. Relax, okay? Relax. Wait. Even though it broke out of your range, right? Even though it broke out of your range, you have the volume weighted average price right here. Okay? And that candle in and of itself was very, very large. All right? You're talking a $40 candle. All right? 40 bucks. Think about where your stop loss would have to be. $40 away. If you entered on this bar, you're expecting a $40 stop loss, all right? Now, granted, your take profit zone is great. Looks good, okay? It looks good, but you don't want to take trades that look good, right? You want to take high probability trades. Coming out right to the VWAP is not a high probability trade, all right? I apologize. I don't know why this screen keeps doing this. I think I'm getting like power surges here. Now, while we're talking about that, did any of you happen to look at your 50% line? Right? Did we have any retracement whatsoever back to that 50% line? Or did we start from the top and come down and break through? Right? This one, that's why I said in the beginning, this is a good one. I wanted to do it this way to give you guys that test to see if anybody of you were subconsciously thinking what you just learned back here. Right? We just talked about if it comes from the top, it's not going to work. Breaking out. Okay? So you got a little test right here. But that's good because this is the way I want you guys thinking. In our group, in our training, you're going to be put to the test. All right? I don't want to just be out here teaching you guys. I want to be testing you. I want to hear you guys tell me on that microphone, "Hey, wait. Look at this." Right? Outside of this, looking good, right? Outside of this, looking really good and juicy with a lot of profit potential. Breaking out of that range. Where did we start this move, guys? Okay? We started this move from the top. Remember, we just went over it. You want to be in the bottom. Right? You want to be in the bottom 50% of the range. You don't want to come from the top to the bottom. All right? You would want it to do this and be trading under that 50% mark. All right? You would want that pullback. You want to be under the 50% mark. You don't want to come from the top and break out. Those will never work. Okay? Never. They'll never work. Remember that. They will never work. So now, what can you do? Now you expand your range. Okay? You expand your range. Now, does this look any better for a trade? Does it look any better? Oh yeah, in my opinion, now it looks better. And let's just draw this. Come on. Now, we're in the bottom 50%. Yes, we were in the bottom 50% here as well, correct? But we came straight down, right? We started from the top. Here, we didn't start from the top. Okay? Very important. We didn't start from the top. We started 75%, retested at 50%, retested at 25%. Ding, 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 ding. That's your golden zone. That's your get ready to take this trade, guys. All right? Now, here's another example, perfect example of why we don't want to be greedy. Okay? Remember, the market is designed to mess with your head. All right? It's designed based on your emotions and your feelings. That's why I tell you to get rid of them. Don't bring them to the table. Okay? Now this is up in that top range, right? So it does look nice and juicy to come right back down here, right? Okay? But there's several problems with us being able to make this move, you know, in even to catch this measured move to the left. All right? And that may not even be it. We might have to look a little further, but the time frame that we're in, the time that this happened, okay? There's not a lot of traders up that early. All right? There's a lot of things to consider when you're trading, and we'll get there. You guys will get there. I promise you that. All right? But this is another time where you don't want to be greedy. In the the aftermarket hours, you want to keep your positions small, tight, and nice. All right? Nice and clean. Let's go back up and look at this. This is your signal bar telling you, hey, we should get ready to take an entry because everything that we know lined up. Okay? 50% of that range. We didn't start from the top. Here's 75, 50, bottom 25% of that range. Couldn't ask for anything better. All right? Here's your confirmation. Get ready to enter. Here's your entry. Here's your stop loss. Now let's look left. We should have already done this again. But let's move out to the left and see what we got. So to the left, let's drop this line. It's not wanting to work. I think I got to double click and that's my problem. Yep. All right, so that's the left that you're looking at. Why not this left? Well, we actually could. Let's look at both. Why is it not working? Caramba. I don't know why this is giving me such trouble. But let's just look. We got 11,255 if we look at the price. All right. Here is 11,255. So right in this area is where we have the potential for a price reversal. All right? So right in that area, we have a potential for a price reversal. This would be your second area of potential, and this would be your third. All right? So you have three areas that you could see a possible reversal. This one would be invalid because it's so close to that breakout level. So this is the one you would want to look at. All right, so from here to here is about a $40 move. You would be looking to capture half of that. And you would have got filled. Okay? Your winning trade, not being greedy, would have paid you. Being greedy would have got you stopped out. All right? What do you got you stopped out? Again, you'll develop your own method, your own rules along your trading journey. All right, guys? So watch this video again every day. Keep watching it until you can jump on the screen in the morning and start identifying your areas of ranges, okay? If you see a range, identify it. All right? Even though this is breaking out to the downside, there are plenty of other ways to trade, right? But right now, we're only focusing on ranges, okay? Once you guys have the ranges down, we'll focus on something else, and we could trade this a totally different way, all right? But right now, I want you guys to have the range mindset, all right? I want you to know how to start building a range and trading a range. Okay, guys? Have a great day, and we'll see you tomorrow.